I decided to get some fish tacos after I got hungry.
So T, this one goes for you.
What would you call me? Is it like kind of like an intern or like a newbie or like?
I think we're all in an internship right now.
Good afternoon, everybody. My name is Shafiq.
My name is Angel.
Hey guys, my name is Joel. They call me El Profesor.
More or less a beginner trader.
Although I'm a student here, I don't really know a lot about the stock market, but yeah, I've just begun my journey and I placed my first trade 2 days ago and I'm up $5,000. So
Be going over market terminology. This whole series is going to be a beginner's perspective.
So without much further ado, I'm going to get started.
ask. It's whatever price someone is willing to sell their stock at.
Market order is basically you want to get something filled fast. That's the market. Think about the buy it now price on eBay.
REIT, Real Estate Investment Trust. Basically, if you've ever wanted to invest in real estate but didn't want to actually own the physical asset, the land or the property, you tap into a real estate investment trust.
Ticker, the money signs, or as I call it, the abbreviations of a company.
This is if you want to enter a stock at a better price, not necessarily the official price. You get to pick when you want to enter it. I want to enter it at this exact price because it suits me and it's going to save me money.
An IPO. It stands for initial public offering. Basically, I have a company. I want to offer it up to the market so that people can buy into my company because they believe in it and its potential for earnings.
Candlestick, this is a good one. It actually took me a little bit of time to get the hang of it. They're usually green and red. Green meaning they go up, bulls, or red meaning they go down, bears. Some charts may have the candlesticks or some maybe even lines.
Stop loss it's a really good tool you use. It's going to save your ass. It basically helps you exit a position if it's not going your way.
Defensive stocks. Defensive stocks are stocks that basically don't change with the market trends because people continuously need to use the assets that they are related to.
Charts, pretty simple. It's what candlesticks show on, and it's what you will usually look a pattern. So in charts, you look for a pattern.
Target price. This is when we enter a trade, enter an option or a stock. This is the price we are looking for it to go.
Next up is cyclical stocks. Cyclical stocks, they change with the economy. So if the economy is booming, these stocks, they boom. If the economy is tanking, these stocks, they tank.
Time frame. So in a chart, you can use different time frames such as daily, weekly, monthly, or yearly. And each candlestick is actually a time frame. So if you choose the 5 minute, each candlestick will be a 5 minute one. And then once that over, there's another candlestick.
Commodities are things like gold, precious metals, cotton, oil, the things that are used in industries on a regular basis. Usually they're traded on the futures market, but they are everyday items that we need to sustain ourselves.
Market open. This is the time you should be up an hour before market open doing research. This is the time stock market's open.
Pattern, it's usually what you're looking for in a stock's chart. They are visual and simple to spot once you get the hang of them.
Okay, so next up we have market capitalization, otherwise known as market cap, is the total amount of value for the shares that a company has itself. And the equation will come up on the screen so you can do the math yourself.
Market close. This is the time where you get to go home and
watch Kramer. Low of the day, LOD. It's the lowest point a stock has reached during the day. And if you're looking at a previous, like yesterday's low of the day, it'll be PLOD.
Liquidity means how easy it is for you to take the money that you have in your brokerage account and put it towards your regular savings banking account. It's how liquid or fluid your money is.
Equity. So this is common shares of the company. Think of equity as you're going into this stock directly proportional to what that stock price is. It's one of the safer ways to invest, from what I hear. I don't know anything.
High of the day, HOD, the opposite of LOD. It's usually the highest price the stock has traded for during that day.
So volume is, I want to buy 10 shares, and Jimmy wants to buy 100 shares, and Sally wants to buy 1,000 shares. The volume is the amount of shares that are being traded within a specific period of time.
The broker is the middleman between you and the trades, and right now it's in platforms. Robinhood's a broker, TD Ameritrade, Thinkorswim is a broker. Brokers is going to allow you, the software is going to allow you to make those trades. There's a lot of free brokers.
All-time highs, ATH. It's definitely what you want to be hitting if you're in a trade. It's the highest price a stock has reached since the existence of that company or stock.
So price action is basically how a stock is moving. So the way, if the price is going up and the amount of volume behind it. So it was dormant for about 20 minutes, and then on the 21st minute, it just started to skyrocket because a bunch of people decided to buy into this company because of the news that came out on CSNBC.
Commission, some brokers for certain trades charge commission. This is the fee to execute the trade. From my understanding, it's not proportional to the trade, but basically they got to make their money too.
All-time lows, ATL. It's the lowest price stock has traded since the existence of the company. It's usually what you want to buy at. So there's only up from there.
Dividends are specific amounts of money or percentage of earnings that a company gives out to their shareholders just for owning their shares. They want to reward you for investing and believing in them, so they're going to give you some payback over time without actually having to liquidate your stocks or your securities within that company.
Bull or bullish. This is literally, think of a bull going up a hill, and bull just means you skyrocket. Okay, so bear or bearish. That means stock's going down. I thought it was B-A-R-E, but no, it's actual bear. From like bear holding something down, pushing something down.
Top side is when a pattern on a chart goes up, breaking the resistance. Downside, it's the same, but down, usually breaking support.
An exchange traded fund is basically a grouping of stocks and options and commodities into one package, and that package is used as a singular security, typically within a sector.
Sideways or consolidation. This is when a stock is pretty much just hanging in there in the middle. You know, it's gonna go up, it's gonna go down. That period is called consolidation.
Higher lows, if a stock goes down or has tanked and the next candlestick opens just above that, that's considered a higher low.
Volatility is so something is highly volatile. The typical example is Bitcoin, right? It's dropping from $10,000 to $5,000 back up to $20,000 within a specific period of time.
So resistance, your stock is not getting past a certain number. This is usually because there's resistance. Once that's broken, usually see gains. Support is usually bottom base, opposite of resistance. Usually when a stock isn't going down completely, it's because it has some support underneath it.
Swing trading is one step below position trading. So basically you're buying something low and selling it high within 3 days, 4 days.
Lower highs, the opposite of a higher low. These can last a while and you'll begin to see them if the price is to the downside.
So shorting is when you believe that a stock is going to go down within a certain period of time. If you want to short a stock, you get in with the assumption that it's going to go down in value.
Bid, exactly what it sounds like. This is what people are willing to pay for a stock.
Position trading. Position trading is for those long-term investors, those investors who want to buy something now, hold it for maybe 2 months, 3 months, years, etc.
Intraday is a chart that gives you an estimate of what the stock is after hours, so when the market is closed and before it opens. That's why Angel mentioned, you know, you gotta be up 1 hour before the stock market is open, so you can look at intraday charts and estimate your moves for the day on that.
Okay, scalping is when you're day trading essentially. You buy it for a short, you hold it for a very short period of time. It could be minutes, it could be hours, but within the same day, you buy it low, you sell it high, you take those profits.
Day trading. So a trader that buys and sells shares in one day, these guys look at intraday charts all the time. And these guys are fucking crazy. and always want everything done super fast. So T, this one goes for you.